You're staring at a hospital bill the size of a mortgage payment, and your stomach is in your throat. It's 11 at night, the house is quiet, and you're wondering how you'll ever pay this massive fee for a short trip to the emergency room. You worked a double shift, came home, opened the mail, and now sleep is completely off the table. What if I told you that the hospital might actually have to erase that entire bill? There's a massive, hidden loophole in the medical system, and it's sitting right there in the fine print of your paperwork. But people miss it every single day because they make 3 massive mistakes when they deal with hospital billing. If you know how the system actually works, you can legally force them to wipe that debt clean. We're going to walk through the exact errors people make, why those errors cost them thousands of dollars, and what you should do instead. The first giant mistake people make is assuming they make too much money to get any help. You look at your paycheck, you see your gross income, and you tell yourself that you don't qualify for financial assistance. You throw the bill in a drawer, hope it goes away, and end up ruining your credit when they send it to collections. You assume help is only for the completely unemployed. That's exactly what the billing department wants you to think. But you need to understand a concept called charity care, which is simply a hospital's official policy to forgive some or all of your medical debt if you can't afford it. Now, you might be thinking that you make $70,000 a year, so you definitely don't qualify. But because of charity care, many nonprofit hospitals will still write off a huge chunk of your bill. Let me explain why this exists. The government requires nonprofit hospitals to provide a community benefit to keep their special tax-exempt status, which just means they don't pay federal income taxes because they're supposed to help the public. To keep that lucrative tax break, the federal government forces them to offer financial assistance to patients who struggle to pay. Because of this rule, many hospitals will completely erase your bill if you earn up to 200% or even 300% of the federal poverty level. That number varies depending on where you live and the size of your family. In some states, a family of 4 making $80,000 a year can still get a massive discount. Instead of assuming you make too much, you should call the billing department and specifically ask for their financial assistance application. Never ask if you qualify. Just ask for the paperwork, fill it out, and let them tell you no. You'll be shocked how often they say yes. The second massive mistake is paying even a single dollar on the bill before you apply for help. You get the scary envelope in the mail, you panic, and you immediately log into the patient portal to pay $50 just to show them you're trying to be responsible. You might even put it on a high-interest credit card because you're terrified of the collections department. Don't do this. Paying even $1 tells the hospital that you're accepting the charges and that you've the means to pay. If you make a partial payment, they can use that against you to argue that you clearly acknowledged the debt and agreed to the full amount. Instead, you need to freeze the process completely. You need to ask them to put a financial hold on your account, which is just a temporary pause on all billing and collection activities while they review your application for help. If you submit an application for charity care, federal rules require nonprofit hospitals to pause all aggressive collection actions while they process your paperwork. If you pay them first, you're throwing your own money away. What you do instead is keep your wallet closed, ask for the financial assistance application, and submit it before you pay them a dime. The third mistake happens when people finally get denied. You fill out the charity care application, the hospital sends you a letter saying you don't qualify, and you immediately give up. You assume the hospital billing department has the final say, so you start draining your savings to pay the debt. You accept the denial as the absolute final word, but the people working in the billing office are just administrative clerks following a basic math formula. They make mistakes all the time. Consumer debt is money you borrow for regular things, like credit cards, auto loans, or personal loans. The rules for consumer debt are incredibly strict, and the banks will hunt you down and garnish your wages if you stop paying. But medical debt is totally different. The major credit reporting agencies made massive changes recently. A credit reporting agency is the company that collects your borrowing history and calculates your credit score, which is the number banks use to decide if they'll lend you money. Right now, unpaid medical bills don't immediately appear on your credit report. You usually have a full year before an unpaid medical bill hits your credit history. Even if it does eventually show up, the credit bureaus now remove fully paid medical bills from your credit report entirely. If you pay it off later, it vanishes from your history as if it never existed. Consumer debt doesn't work that way. If you miss a credit card payment, it stays on your report for 7 years. If you use your credit card to pay the hospital, you just traded a flexible medical bill for a toxic credit card balance that will haunt you for almost a decade. What you do instead is never trade flexible medical debt for strict credit card debt. Keep it as a medical bill. Ask for a monthly payment plan. Hospitals almost always offer zero-interest payment plans. You can pay them $50 a month for years without ever paying a single penny of interest. The fifth mistake is throwing away the terrifying collection notices. You get a thick letter in the mail from a debt collector, you get scared, and you throw it straight into the trash. You bury your head in the sand because you don't have the money, and ignoring it feels like your only option. When you ignore a collections notice, you lose your legal right to challenge the debt. When a hospital sells your bill to a collection agency, which is just a company that buys old debts for pennies on the dollar and then hunts you down for the full amount, they have to notify you. Under federal law, they must send you a debt validation letter, which is an official piece of paper that says you've 30 days to dispute the charges. If you ignore the letter, they automatically assume the debt is completely valid, and they'll eventually take you to court for it. Instead of ignoring the collection notice, you need to exercise your right to demand debt validation. You send a letter back to the collection agency within 30 days and demand strict proof that you actually owe this specific amount to this specific hospital. You ask them to validate the debt. Collection agencies buy thousands of accounts at a time, and their paperwork is notoriously sloppy. Half the time, they can't even produce the original contract or the proper itemized billing statement from the hospital. If they can't prove it, they can't legally collect it. They have to erase the bill completely. This is a general explanation of how these consumer protection laws work, but every state has its own specific deadlines and rules for handling debt collections. You absolutely must check the specific rules for your state, and if a debt collector is threatening to sue you, you need to get a local consumer protection attorney immediately. An attorney can often stop the harassment and force the collection agency to back down. I want you to keep in mind that this discussion is education, not legal advice for your specific personal situation. Laws change constantly, and a local attorney is the only one who can look at your exact hospital bill and tell you precisely what to do. When you know how the hospital billing machine actually operates, you stop being a victim to the system. You understand that you've leverage. You know how to demand financial assistance. You know how to appeal an unfair denial, and you know how to protect your credit score without draining your savings account. Tell me down in the comments, what is the most ridiculous thing a hospital has ever tried to bill you for? If this breakdown helped you understand how to fight back against a massive medical bill, pass this video along to a coworker who is currently stressing over a stack of scary hospital paperwork. Make sure you subscribe to Scribble Law so you always know the exact rules of the game before a greedy billing department tries to wipe out your bank account.